Welcome again. I'm joined by Scott Reid, owner of Reid & Company, along with Kevin Coon, former owner of a large regional investment firm. Scott, we talked briefly during our last podcast about being a business leader during COVID-19. Let's now talk about the potential impact of the COVID-19 pandemic. Kevin, you come from the personal finance side, and Scott from organizational effectiveness. Where do we start, and how should we break this down? Scott?
It may help to break things down into three areas regarding the future impact. I would say economic, social, and political.
Okay, well, let's go ahead and start with the potential economic impact.
So with the economic impact, there are some challenges that are more obvious than others. Some of the obvious ones are the trillions of dollars lost in business revenue worldwide that some will simply never recover from, especially small businesses. There are projections in the U.S. reaching a 20% plus unemployment within the next few weeks. Many newly unemployed, and it's 22 million and counting now, may find that returning to work will take longer than planned, which will impact the economic recovery. It takes time for companies to rehire following a reduction in force, particularly one like this. And so the focus is going to be more on cost management, streamlining the business, and looking at the quality of the employees rather than the quantity, especially with all the uncertainty. So it's going to take some time to get people back to work.
Right. So what are some of the challenges that are not so obvious?
So there's going to be an increase in future volatility. We're going to have other viruses to come. And given this current response and reaction to this virus, people and businesses are going to become immediately alarmed as to, oh no, what's going to happen now? Because this is what we've done in this case. So there's just going to be a heightened level of awareness and anxiety, really, if something else happens like this. Business owners and lenders have to manage risk. It's simply the nature of starting and running a business. And I'm afraid that with this response, particularly the government's involvement today as well as back in 2008, it may set a precedent of expectation that governments will continue to provide this financial protection and provide subsidies to businesses. And social distancing may lead to new regulations, making it difficult for businesses to simply survive. And many may need to increase pricing in order to make up for smaller numbers and volume. And so what you might find is that this could result in inflation. And then finally, businesses with limited access to sales and distribution channels will find it difficult to compete with competitors that have well-established channels. So major companies, huge companies with these robust logistics and distribution channels such as Amazon, Walmart, Target will likely increase their domination over smaller businesses and impact the distribution of wealth. Small businesses make up to close to 50% of our total economy, and it creates approximately two-thirds of all new jobs. So they are the backbone of our economy, and we need them to not just simply survive, we need them to thrive, and this will make it challenging.
Kevin, can you talk about some of the personal financial challenges?
Hi, Scott. Hi, Shauna. Thank you.
Hi, Kevin.
Thank you for letting me participate in this worldwide podcast at such a historic time. As you know, the financial market's recent response has confused many experts, along with their analysts, and their projections change daily. To many experts, stocks are considered overpriced, even without the financial impact of the shutdown. Yet the stock market continues to rebound while corporate losses mount up. Speculation is driving a volatile buy low, sell high casino mentality rather than the financial fundamentals that measure the stock value against future earnings. So the risk of taking losses versus the lost opportunities to make gains is becoming a lot more complex. And this mentality of investing seems to be putting at risk the life savings of many who are in or approaching their retirement age. Now, because the feds have lowered interest rates over the past decade to almost zero, it's nearly destroyed the opportunity to put money in safe, fixed interest rate assets, such as CDs and money market accounts. You may know that this leaves the aging population with few viable options to safely invest their long-term retirement savings with without incurring any risk. Right now, many who are approaching retirement may have to work longer. Their investments have lost money, and they may lose their job. Many currently retired may find themselves working again just to make ends meet. And as you know, no one wants to see that happen.
Thanks, Kevin. Well, and on top of all of that, Scott, you mentioned the social impact.
Right. So some of the areas that will potentially impact us in the short term are a large percentage of those working earn less than those who receive government support, which leads to resentment, even longer-term employment. It's not likely that we can completely protect everybody, every way, every day from being exposed to a virus. Many professionals simply in the healthcare have talked about our body's ability to combat a virus, stating that it's simply the nature has to take its course where the body builds immunity. We're currently buying time with social distancing to prevent overwhelming the healthcare system while a vaccine is developed. However, it has been said that social distancing will extend the duration of the pandemic and its impact.
So that's our challenges right now in the short term. What about the long-term impacts?
Individual entitlement for government protection against future illness and exposure to viruses is a long-term impact. So the total annual budget for the U.S. is around $5 trillion, while the total revenue is closer to $4 trillion. And the government stimulus response to this alone is projected to exceed $5 trillion. And the shutdown will obviously decrease tax revenue. And the question is, how to afford this? Governments have been widely supported, right or wrong, in their decision to close almost all businesses, affecting the livelihood, the years of dedicated hard work, the personal investment, and the morale of almost all business owners, rather than providing strategic, actionable guidance to minimize risk. Now, we're starting to see that right now with the recent announcements in terms of going back to business. But this is really unprecedented and unthinkable just a few weeks ago. So could this type of response lead us more of the same down the road? And that's going to be a long-term impact, I believe.
Scott, let's talk about the political impact also.
Well, I mean, obviously, I'm not a politician, but that said, precedence has been set by this response. So leaders who respond in a lesser way to future situations may be at risk of a severe public backlash, including being held personally responsible. We have seen quick, overreaching decisions made from speculation and even fear rather than factual data, which has created a lack of trust and credibility in organizations that really are responsible for providing guidance and expertise in these matters. Meanwhile, media outlets seem to fuel speculation about writing politically motivated stories that create news rather than reporting the news, and we were really unprepared in many ways for this. Finally, the international relationship between the U.S. and China has been under stress these past 5 years, impacting trade and potential growth. And the recent concerns involving the coronavirus is adding even more pressure. So if our relationship continues down this road, we will find it increasingly difficult to do business within this region, which could be alarming given the trade between us is well over $700 billion. And a trade war would not be good for either of us.
So that's a lot to think about. What do you suggest we do in response to these challenges?
Let's learn from the impact of these decisions and know what's within our control. So past trends and impact of these responses provide valuable clues into the future. As an example, I've learned that if I need something, everyone else needs it too. So I have a hard time getting it. The problem is that I didn't know what I needed, and by the time I did, everyone else needed it as well. And I know more of what I'm going to need now, so I should be smarter in moving forward and be prepared. The other is from a business standpoint, look for multiple channels to effectively deliver your products and or your services. A simple example is a restaurant. So those restaurants with a drive-up window versus those without, online versus stores, and meeting versus, or net meeting rather, versus in-person meetings. I mean, these are all simple things that some businesses have been able to provide, which has helped them continue. And then in terms of developing a flexible, high-performing workforce that can fill in multiple gaps and quickly respond to change, we're going to need to have some flexibility in our workforces so we can adjust in terms of supply and demand, and then effectively utilize multiple platforms for communication on an ongoing basis. We have to be good at what we're communicating and how we're communicating. We also have to be able to use different forms and different varieties of communication and become very proficient at it, and have hope in the long-term outcome rather than focusing on the expensive and temporary short-term fix. Companies should offer options that provide investment stability along with growth while incentivizing performance and retention. So company stock options such as RSUs, ESOP plans are samples of effective investments and incentives for your highly valued employees. Let them have some skin in the game with your business. We may need to face the reality that moving manufacturing to China has added challenges and is a threat to our future interests. It's not a matter of if, but a matter of when and how do we start relocating some of these manufacturing facilities back to the U.S. It would help if the U.S. supports this effort by providing incentives, whether it be governmental incentives or what have you. The big question is doing this without the lost access to the Chinese market, as well as this managing of costs. On the surface, it seems to be a monumental task to restore a manufacturing base. So it's going to take years of intense focus and a strong message from the customers that this is what we're looking for.
In today's world, there are many options for investment advice, for learning about the stock market, learning about the import-exports, and how things work in this economy. I'd like to talk about one of the things that you should consider in maintaining a diversified investment plan. It needs to be able to hedge against significant downturns. We need to learn also, in a stock market like this, try to resist the temptation to play the stock market through speculation. Now, when we do that, it leads to, generally, for most people, a losing strategy of buying into highs, selling into the lows, and losing money. A lot of people still feel the need to play the stock market, and so I recommend you use money that you can afford to lose rather than your life savings that you might be depending on and that you've worked hard to build up all these years. Also, when you're considering investments, you need to consider all of your assets. Assets like your home, maybe you have properties, 401k. It's certainly important for those that are working and those who may have lost their jobs and need to consider the different money that's in their 401k. They build up their IRAs, collectibles, and precious metals. Everything you own basically is part of your net worth, and that needs to be considered when you look at a diversified portfolio that you could use to help reduce your income in a significant downturn. So I hope as people look at their investment portfolios out there, they consider, especially right now, being conservative and using their money and assets wisely.
Any final thoughts, either of you?
Just recognize those who are involved in solving these complex problems and serving each other. Without everyone involved, it could have been much worse. We do need to acknowledge these potential challenges and work through solutions as individuals as well as organizations in order to move forward. We have a lot of brilliant people running businesses, both large and small, and I have no doubt that many organizations will work through it, become stronger as a result, and the more we understand, the better we can prepare. And there's a saying that those who are prepared will not fear.
Well, thank you again, Scott and Kevin, for taking the time to share your insights during these very challenging times.
Thank you.